Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because today we're going to be making the case for a left translated cycle for Bitcoin. And although I don't think this is anywhere near the most likely outcome, a lot of investors do. So there have to be good arguments for it. And there definitely are. And I think there's a lot of value in going over those arguments and being prepared for multiple outcomes and not just the outcome we think is the most likely. And in my opinion, there's really three main arguments for the left translated cycle theory. One is that the Fed is forced to cut rates this year, even with inflation being elevated, because if they don't, there's going to be a huge increase in the US Treasury interest payments over the next 12 months. And by just cutting rates by 150 basis points, they'll save the US Treasury $500 billion in interest payments between now and April of 2025. There's also a very strong argument when looking at S&P 500 election year seasonality, but especially when looking at election year seasonality after a strong Q1, and the S&P 500 definitely had a strong Q1 this year. And you can see that historically in strong Q1 election years, we cool off in April and May and then rally for the rest of the year. And we know that Bitcoin and the S&P 500 are incredibly correlated as risk assets and are even more correlated today thanks to the ETFs. So will a bullish S&P 500 for the rest of this election year result in a bullish Bitcoin until the end of 2024 once the elections are behind us and the S&P 500 and Bitcoin cool off? And finally, this is one we've discussed quite often on this channel, the national deficit. We know the federal government is running large deficits right now to keep the economy out of recession, especially with it being an election year. And of course, all of this issuance is going to result in currency devaluation eventually. And as long as the federal government keeps us out of recession via this deficit and the currency continues to be devalued, I would expect it to put upward pressure on Bitcoin and other risk assets, especially in the long term, but maybe even in the short term, as long as we're able to stay out of recession and kick the can down the road until after the election and after 2024. But let's go ahead and start with price action. Honestly, one of the simplest arguments that can be made is if you really zoom out and look at Bitcoin here, we've been in an uptrend for the past year and a half, and even though I believe we're overdue for a longer consolidation period, there's no reason why Bitcoin can't correct to the mid 5,000s, retest the 20-week moving average, and then continue higher into one final blow off top and have this left translated cycle theory play out. But of course, if we do see that trend break and we do see Bitcoin close a weekly candle below the mid 5,000s and below the 20-week moving average, then all of a sudden a larger correction looks a lot more likely, and that would likely invalidate the left translated cycle thesis. But let's go ahead and look closer at rates. We know that in the beginning of 2024, the market was pricing in 6 rate cuts this year. But of course, as inflation has remained elevated and as the unemployment rate has remained low, these rate cuts have been getting priced out more and more. And as of right now, the market is expecting only 1 rate cut between now and the end of 2024. And most likely that rate cut will be in September. However, if we do see the unemployment rate get above 4% sooner than that, the Fed already said they will begin cutting rates if that were to occur. But even if that doesn't happen, look at the gap in projections of the interest payments the US Treasury will have to pay if the Fed keeps rates at 5.5% like they are right now. And this is why the Fed is trapped in a very bad scenario right now. If they don't cut rates and keep them elevated, yes, they will be able to fight inflation, but the US Treasury interest payments will skyrocket and the debt spiral that the US government is already in will just continue to get worse. However, if they do cut rates to help the Treasury and bring down those interest payments, they run the risk of inflation resurfacing, and that got them in huge trouble with the public in 2021. We don't know which choice they're going to pick, but we're definitely going to continue to monitor it going forward. But one of the best arguments for a left translated cycle and a huge melt up in risk assets would be the Fed being forced to cut rates early because of what's happening with the national debt and US Treasury interest payments. And of course, rate cuts before something were to break in the economy would be very good for the S&P 500. We know that it tends to have pretty consistent seasonality. And as long as the federal government is using deficits to keep the economy out of recession, I don't see why the S&P 500 can't do very well for the rest of the year. I feel like they're going to do whatever it takes to make the market and economy look strong until the election is behind us. And of course, if we look at historical correlation between Bitcoin and the S&P 500, if the S&P 500 really starts rallying higher, I think Bitcoin could tag along, especially because so much of Bitcoin's narrative right now is driven by these ETFs and driven by the fact that it is a monetary debasement hedge. And of course, national deficits are the definition of monetary debasement, but we are seeing a slowdown in the excitement and the inflows for these ETFs, especially recently. We said for weeks that it was likely these inflows and this excitement would slow down, and we've now seen 3 days of decent outflows in a row. I don't know how BlackRock always says zero, even though they have a ton of volume. It's something that we're going to have to wait and see what actually happens with that. But as of right now, we're getting the expected cool off in all this ETF excitement and demand. And be very careful listening to the people that keep saying, just you wait, the inflows are just getting started. You haven't seen anything yet. 500 million a day is coming. 1 billion a day is coming. They're not even recommending it to their clients yet. I do agree these ETFs are amazing in the long term, but in the short term, they did get overhyped in my opinion, and this is some healthy cool off. However, maybe if we do see the S&P 500 go back into risk on June onward for this year, maybe that could bring some inflows back into the ETFs, and maybe that could cause Bitcoin to put in one last big rally towards 100,000. Now, even if we do get the left translated cycle, I think there's a very, very, very low likelihood of Bitcoin clearing 100,000 in 2024, no matter what anybody says. I think it's incredibly likely that if we get anywhere near 100,000, investors will front run that big round number. Ever since I joined this space in 2017, the number everybody always talked about year after year was 100K Bitcoin, $100,000 per Bitcoin, 6-figure Bitcoin. So if we do start getting closer to that price, I do think selling will really, really ramp up. And I think we do not have the necessary accumulation and consolidation required to breach above that level and continue higher. If we enter a larger reaccumulation phase and really build a big base, then it does become a possibility. But if we have the left translated cycle like we're discussing in this video, very unlikely it makes it to 100,000 in my opinion, and I will start DCAing out of the market if we get above 80,000 in 2024, especially if this parabola continues to look as vertical as it has looked so far. But of course, we'll talk about that more once we actually clear 69,000, because if we were to get a strong close above it once again, then it would look likely that maybe the left translated cycle theory is playing out and we will go higher in the short term. But for now, it looks way more likely that we have a larger consolidation like I discussed in my last video. But those are really the 3 main arguments, and they are strong ones. Early rate cuts without something breaking in the economy, S&P 500 seasonality and markets being risk on going into the end of an election year, and of course currency devaluation and federal deficits. There's even some bullish signs in on-chain indicators. We are still above the short-term holder cost basis. Normally this is a level we stay above in uptrends and bull markets, and right now we are still above it. And I also think there's a good argument that a lot of investors, including myself, aren't really excited to sell Bitcoin at these prices. I mean, we have our eyes set on much higher prices, and I don't think the sell pressure would actually heat up until we got above 80,000. And that's also a good argument as to why it is possible that we see higher prices in 2024. I don't see sellers stepping in that aggressively, and definitely not aggressively enough to send us immediately lower very quickly. I think it's way more likely that we consolidate lower and build a base in the summer to continue higher towards the end of this year and mostly early next year. And that's essentially the thesis for the left translated cycle. Now, again, I don't think this is the most likely outcome, but I am prepared with my portfolio in case it is. But the scenario I think is way more likely is a longer consolidation period. I have no idea how deep that consolidation goes for now, but I do have cash ready for it in case it happens. And I do think it's very unlikely the Fed will actually be able to cut interest rates as early as the US Treasury would like, but it is not a zero possibility. We'll definitely monitor it going forward. And with the cool off in excitement and potential outflows we've seen out of the ETFs, I think the larger consolidation, like we mapped out in the last video, is a lot more likely. And quick updates on some other things I like to monitor. The S&P 500 got the bounce off the 20-week we were expecting, but I would still expect this to roll over and consolidate lower, maybe even retest that previous all-time high. That also agrees nicely with the seasonality we see in April and May in these strong Q1 election years. And of course, Bitcoin dominance still holding above 54%. A weekly close below there likely means alt season, so I think it's way more likely we consolidate above that region and continue higher. And we're still seeing decent weakness from Ethereum and Solana, with these ugly wicks to the upside showing that sellers did in fact step in this week. This is possible, but I don't think it's that likely. If it is, amazing, we're prepared for it. If it isn't, we'll have to see what happens. But this is kind of my general outlook in terms of scenarios that I think that are most likely for Bitcoin. But anyway, we'll definitely monitor it going forward. Let me know what you think of the left translated cycle. Do you think it's a possibility? Do you think it's incredibly likely, or do you think it's impossible? I would love to know. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.